All right, buckle up because we're going deep on this one. We're talking crypto, we're talking the global economy, and oh yeah, we might even bump into some politics along the way. You sent me this discussion between Marcus and George, recorded on March 11th. It is wild.
What really struck me is how raw and unfiltered it is. I mean, we're hearing directly from people who live and breathe crypto. It's not like your typical market analysis, buttoned up in charts and graphs. This is more like, well, it feels like we're eavesdropping on a real honest conversation.
Yeah, and they're wrestling with some big questions too, like this crypto bloodbath. Everyone's calling it the big market drop. They're trying to figure out what it means, if it's the start of something bigger or just a blip.
Right. And they go beyond that too, like the impact of tariffs, how some businesses are making some really interesting moves because of them. Oh, and they even talk about, get this, a national Bitcoin strategic reserve. And that's pretty huge when you think about it.
Yeah, I mean, where do we even begin? I guess we should probably start with the crypto bloodbath they keep mentioning. It sounds like Marcus and George are both feeling the heat from this market drop, but they have pretty different ideas about what it all means.
Yeah, it's like that age-old debate, is this a bear market or just a dip?
Yeah.
Marcus seems to be, he's kind of taking it in stride. He thinks it's just the market doing its thing. He even points out how our perceptions of value change over time. What used to send people into a panic, like Bitcoin hitting $2,000. Well, now people are bummed out when it's hovering around $80,000.
Wow, that's pretty interesting. It's almost like we get used to a certain level and then anything below that feels, I don't know, disappointing.
Exactly. But then there's George. He's really focused on what's going on with DeFi, which is decentralized finance. It's taken a pretty big hit, and he sees it as a sign, maybe, that the whole DeFi sector is in trouble.
And to really bring this home, Marcus actually shares a personal story about something called impermanent loss. Now, I don't know if everyone's familiar with that term, but basically it's what can happen when you provide liquidity to a DeFi protocol and the value of your assets change relative to each other. It's complicated, but he essentially ended up with less value than if he'd just held onto his assets.
It can definitely be tricky, that's for sure. But Marcus's story really shows how even if you're experienced with crypto, DeFi can still throw you some curveballs. It's definitely a higher risk area of the market, no doubt about that. It makes you think, what level of risk are you really comfortable with when it comes to your crypto? Are you in it for the long haul? Or are you more active trading and maybe getting involved in those DeFi protocols?
Right, right. It's a good question for everyone to ask themselves before jumping in. Okay, so let's switch gears a bit here. Let's talk about tariffs. This part of their conversation really surprised me. It sounds like President Trump's tariffs, they're actually having this unexpected side effect. Companies like Samsung, Volkswagen, even Chipotle, they're all moving some of their operations to the U.S. to avoid the tariffs.
It just shows how economic policies that can have all these ripple effects, even ones that nobody saw coming. On the one hand, you have this influx of investment and manufacturing jobs in the U.S., which could be great for the economy.
But then on the other hand, what about prices for consumers? Are they going to go up? And what about jobs in other sectors like tech that rely so heavily on global supply chains? I mean, it feels like, one side wins and the other side loses.
Absolutely. And the bigger question is, how does this tie into the whole global economic picture? How will this influx of investment affect inflation? And what about interest rates? There are a lot of moving parts here.
It's like this chain reaction. One thing leads to another and then another. Speaking of chain reactions, let's talk about this idea of a Bitcoin strategic reserve.
It seems like President Trump has been pushing this idea. And, well, let's just say there's a lot of confusion and misinformation floating around out there about it.
Yeah. Like, for example, there's this whole thing about Trump supposedly promising to buy like $6 million worth of Bitcoin. But that's not actually true. If you look at the actual executive order he signed, that was never part of the plan. What he's saying is that the government's already holding some Bitcoin, from seizures and things like that, and they're not going to sell it.
So it's more about holding on to what they already have rather than buying more, which, I mean, it's a subtle difference, but it's an important one. And it just shows how important it is to, really fact check things, especially when it comes to crypto, because things change so fast.
Right. And there's another interesting detail about this Bitcoin strategic reserve. The Secretary of the Treasury, a guy named Scott Bessant, he's going to have control of the custodian accounts. Wait, so you're saying that one person is going to have all this power over, like, this decentralized asset? I mean, isn't that kind of contradictory? Isn't Bitcoin supposed to be, free from centralized control?
Yeah, it's definitely raising some eyebrows. And that's where this suggestion from David Sachs comes in. He's saying we need to do a digital audit of all the government's crypto holdings, just to make sure everything's transparent and above board.
It's like, checking their homework. Makes sense to me. But then again, transparency can be a bit of a double-edged sword, right? What if this audit finds something shady?
That's always a possibility. And that's why this whole topic is so politically charged.
Mm.
But it's important to remember, we're not here to take sides. We're just trying to understand the facts as they are.
Right, right. Okay, let's move on to this crypto summit that Marcus and George were talking about. Seems like it was a big deal with all the big names there, but in the end, not much really came out of it.
Yeah, they even called it a nothing burger, which, that's got to be a little disappointing.
It does, especially with all that hype leading up to it.
But there was one suggestion that stood out. Michael Saylor, the huge Bitcoin advocate, he suggested that the U.S. should try to acquire something like 25% of the total Bitcoin supply by 2035.
Wow, 25%. That seems a bit extreme, doesn't it? Wouldn't that go against the whole decentralized nature of Bitcoin?
It's definitely a bold idea. And honestly, it seems like some of those early Bitcoin supporters, they're starting to look towards other options, like privacy coins like Monero.
So it sounds like there's a growing concern about the direction Bitcoin is heading in, especially with the influence of these big institutional investors.
It does make you wonder if Bitcoin is starting to stray from its original vision. It's a good question.
And it ties into another interesting thing. They talked about the Bureau of Labor Statistics report. Apparently, in February of 2025, both employment and unemployment went up.
You're kidding. How is that even possible?
Yep. I know, right? Doesn't seem to make any sense. But they mentioned that government job losses could be a factor. And that might tie back into our earlier discussion about, the USAID initiative and the whole robot takeover of government jobs.
Right. I see what you mean. So even though some sectors might be adding jobs, others could be losing them even faster. And that's where we're seeing this weird situation where both numbers are going up.
Exactly. But here's where it gets even more interesting. Remember that big mistake in the BLS report back in March 2024? The one where they accidentally added 800,000 jobs?
Oh, yeah, I remember that. I thought they fixed that.
Well, it turns out that mistake is still having an impact. It's going to mess with how they calculate inflation moving forward, and it could even distort how the media reports on the economy.
So not only was the data wrong, but it's going to have a ripple effect for who knows how long.
It's crazy, right? It shows how even unintentional errors can have these huge consequences.
And it's a good reminder that we need to be careful about, taking everything at face value. Especially when it comes to things like economic data, there's always a chance for bias or manipulation or even just plain old mistakes.
So what does this all mean? The government getting more involved in crypto, these questions about inflation, the potential for data manipulation. It's a lot to take in.
Yeah, it's a lot. And it definitely makes navigating the financial world even more challenging. We can't just rely on traditional information sources anymore. We've got to be more proactive.
So what can we do? How can we make sense of all this?
I think the most important thing is to stay informed, be part of the conversation, and don't be afraid to question what you hear. Do your research, look at things from different angles. That's the only way to really understand what's going on.
It's about empowering ourselves with knowledge, right? Not just accepting things blindly.
Exactly. And that's what we're trying to do here on the Deep Dive. We're trying to help people understand these complex issues so they can make their own informed decisions.
Absolutely. All right, well, we've covered a lot of ground here in part 1 of our deep dive, but we're just getting started. Stay with us, and we'll delve even deeper into the economic data and the potential impacts of these government policies.
I'm excited to keep going. This is fascinating stuff. Welcome back. It's really amazing how crypto and global economics, they're becoming more and more intertwined. It's pretty wild.
You're so right. And as we get deeper into this conversation between Marcus and George, it becomes even more clear. If you want to understand the future of finance, well, you got to understand these connections. No way around it.
Right. Before the break, we were talking about this huge question. Governments are getting more and more involved with crypto. So what does that mean for Bitcoin? Can it stay decentralized?
Yeah, that's a big one. I've been thinking about it a lot lately myself. And to really understand it, I think we need to look back, back to what led to Bitcoin's creation in the first place.
Oh, you're talking about the 2008 financial crisis.
Yeah,
the loss of trust in banks and institutions, the bailouts, that feeling that the system was rigged.
Exactly. Bitcoin, it came from this desire for something different, a financial system that was transparent, secure, and most importantly, free from the control of, governments and banks.
And now, fast forward like 15 years, and look where we are. Governments are not just, acknowledging Bitcoin. They're talking about putting it in their strategic reserves. It's mind-blowing.
It is. It's almost a contradiction, isn't it? I mean, on one hand, it seems like crypto is finally getting some mainstream acceptance, right? Like, it's a legitimate asset.
But then on the other hand, like you said, more government involvement. Does that mean it's losing its independence? That's the real question.
It's this delicate balance. And even in the crypto community, there are a lot of different opinions on this. Like Marcus and George, they don't exactly see eye to eye on this.
No, not at all. Marcus, he seems pretty skeptical of governments, He sees them as a threat to the freedom that Bitcoin represents, which, I get it.
Yeah, and he even points out the irony of Michael Saylor, Mr. Bitcoin, suggesting that the U.S. government should buy up a huge chunk of the supply.
Right. You have this guy, he's built his whole career on pushing for decentralization, and now he's saying the government should own a quarter of all Bitcoin.
It does make you wonder, are people compromising on the original vision of crypto just to get it accepted by the mainstream? Is it about the tech or the money? I don't know.
It's a tough question. Now, George, he's a little more open to the idea of governments in crypto, but he knows it's risky.
Yeah, he does. He thinks it could actually help crypto, make it more legitimate, more widely adopted.
Yeah, he even talks about government-backed stablecoins. They could, maybe bring some more stability to the market, make it less volatile, more appealing to everyday people.
That's an interesting idea. And it's actually gaining traction. More and more countries are talking about launching their own central bank digital currencies, CBDCs.
Yeah, CBDCs. Basically, it's a digital version of their regular currency, but controlled by the central bank. So like a digital dollar or euro.
But the question is, how do we make sure they don't become tools for surveillance and control? Governments could track every transaction, freeze accounts, censor certain types of spending. That's kind of scary.
That's the challenge. And it's why we're hearing more and more about privacy and anonymity in crypto. Remember Marcus and George talking about privacy coins like Monero?
Oh, yeah. I was wondering about that. What's the deal with those?
Well, with privacy coins, it's all about hiding the details of your transactions, making it harder for, governments or anyone else to track you, like digital cash almost.
So it's like, as governments get more involved, people are going to look for ways to stay private.
It's a classic cat and mouse game. Governments will always try to control things. People will always try to find a way around it. It's human nature.
And that brings us to you, the listener. What do you think about all this? Governments and crypto, privacy coins, CBDCs. What's your take?
It's definitely a lot to think about. But one thing's for sure, you gotta stay informed.
We can't just sit back and let things happen, We got to be part of the conversation.
Absolutely. We need to create a future where technology empowers us, not controls us. And that takes work.
That's why we do this show, right? The deep dive. It's not about just knowing the headlines. It's about really understanding the big picture.
It's about having the knowledge and the skills to navigate this crazy digital world. It's not easy, but it's important.
All right, so we talked a lot about the politics and the philosophy of crypto. But next, we're going to get into the nitty-gritty. We're going to look at the economic data that Marcus and George discussed, the potential impact of government policies, and how global markets are all connected.
Let's do it. This is where it gets really interesting.
So we've been talking about governments and crypto, this whole power struggle. But there's another big factor we got to talk about, inflation. I mean, everything's getting more expensive, right?
It's definitely on everyone's mind. And it's interesting, Marcus and George, they even question if the official inflation numbers are accurate.
Yeah. They mentioned this website, shadowstats.com. It claims the real inflation rate is way higher than what the government's telling us. Have you ever looked into that?
I have. It's kind of controversial. They use a different way of calculating inflation, not the same way the government does. They say the government's method, it doesn't really show the true impact of rising prices.
So is there any truth to that? I mean, if inflation is really higher than we think, that's a huge deal. It affects everything.
It's worth thinking about, that's for sure. Because the way we measure inflation, it affects policy decisions. And if those decisions are based on, bad data, well, it could make things even worse.
Right. It's like we need to be careful about just accepting the numbers we're given. Always good to dig a little deeper.
I agree. Now, remember how Marcus and George were talking about that Bureau of Labor Statistics report? The one that showed employment and unemployment both going up at the same time?
Yeah, I still don't get how that's possible. It's like, what?
It is strange, but it shows how complicated things are.
Yeah.
They think government job losses might be part of it. Maybe because of that USAID initiative, the one that's automating government jobs.
Oh, right, right. So maybe some sectors are creating jobs, but others are losing them even faster, and that's why we're seeing this weird situation where both numbers are going up.
Exactly. And then there's that big error they made in the BLS report back in 2024, remember? They accidentally added like 800,000 jobs.
Oh, yeah, that was a big mess.
It was. And it turns out that error, it's still having an impact. It's going to mess with how they calculate inflation moving forward, and it can even, distort how the media reports on the economy.
So it's like bad data leads to bad decisions, and those bad decisions have consequences that last for years.
Exactly. And it just shows how important it is to be critical of the information we're given, especially when it comes to things like economic data. There's always a chance for bias or manipulation or even just honest mistakes.
So where does this leave us? I mean, the government's getting more involved in crypto. There are questions about inflation, the potential for data manipulation. It feels like we're in uncharted waters.
Yeah, it's a lot to navigate. We can't just rely on, the same old sources of information anymore. We have to be more proactive.
So what can we do? What's the average person supposed to do?
I think the most important thing is to stay informed. Be part of the conversation. And don't be afraid to ask questions, do your own research, get different perspectives. That's how we make sense of it all.
It's about taking control, empowering ourselves with knowledge.
Exactly. And that's what we're all about here on The Deep Dive. We want to help people understand these complex issues so they can make their own informed decisions.
Absolutely. Well, we've covered a lot of ground in this deep dive, but that's the beauty of it, right? There's always more to learn.
That's right. The world is constantly changing, and we need to be ready to adapt and evolve with it.
Couldn't have said it better myself. Thanks for joining us on this journey, everyone. Keep learning, keep questioning, and keep pushing the boundaries. We'll see you next time on The Deep Dive.